Ladies and gentlemen, welcome back to your crypto market update Monday edition. Today, the altcoin market popped harder than Mike Tyson slapping Jake Paul.
Ladies and gentlemen,
Whilst Bitcoin whipsawed around, ultimately currently closing higher for the day. In today's episode, we have everything you need to know about what happened in the markets today, my hot picks for this upcoming week of trading, and the tools and strategies you need to stay armed and dangerous. Let's get cracking. So starting off with Bitcoin, here was the market action that we've seen so far today. And currently time of recording is about 4 p.m. Central Standard Time. So about 2 hours before the daily candle closed. But it does look like Bitcoin is going to be closing higher for the day unless we come all the way back down to 89,422, which I just don't see it happening. Overall, we can see that as the market opened up, we opened up with a little bit of instability, a little bit of uncertainty as the market consolidated right around 89,800. We did make a brief dive down for the daily low of 89,422 before beginning the first of several impulsive waves up to ultimately reach our current daily high of 92,700. And one pattern, this is the 1 minute chart. I want you to notice a pattern that I see over and over and over when Bitcoin puts in these big parabolic movements. And whether this is true, whether we're looking at the hourly, for example, when we're talking about really big movements going from something like 70,000 to 80,000, but it's also true on the lower time frames on the 1 minute chart as you see the structure of pumps. And this is very synonymous with Elliott wave theory. I'm not the biggest Elliott wave theory, although I have traded with some of those individuals before in the past. I'm a little bit more technical, but it's a pattern of threes, and that's what I want you to notice. So let's take a look at Bitcoin's initial movement off of the daily low. All right, price puts in a very strong movement to the upside. We have a very short correction. Price puts in another move to the upside. If we zoom in, you can see there's another short correction. And then there is a final last movement to the upside before a more significant correction. And notice that it takes a lot longer following that. All right, a lot longer correction wise following that before we begin putting in another move of that nature. Let's take another look at this move right here, this very strong parabolic move from approximately 90,400 to ultimately, well, to this rise, about 92,416. So fantastic intraday trade for anybody who caught that. We begin the move from right here. We have a strong push up, very strong push up, small correction. Stronger push up, small correction. And then finally, this last third push up and then a more pronounced correction. And then, well, you might be saying to yourself, well, Justin, but there's a fourth leg to that. No, this is really what I guess smart money concept traders would call deviations, or what order block traders would call deviations. I call them stop hunts. Basically, this was the move from here to here, and then we have a correction, and then we get the market pushing up to trap long traders. All right, look at these you can see the point of control is right here. The point of control is right here. So this is where momentum traders really loaded up for this thrust up, and this is where momentum traders also loaded up for this thrust down to the downside. We can see all this distribution that occurred at these price levels. This is when distribution began very strongly right here. So what we need to see moving forward is we do need to see this critical level, 91,861. We need to see this flipped into support. So you see the dynamic of price struggling, unable to maintain itself above this price level, this current point of control, to the point where we have this large correction to the downside. Even on the resurgence, this is the trade that I actually caught today because I had to take a little bit of time with my daughter this morning and take her to the doctor, and that's always a 3, 4, 5 hour affair because our doctor is quite a far way away. So anyways, I finally got to the desk in the afternoon, so I only had about a couple hours of trading, and I snagged one altcoin long, and I snagged this long. This is the trade that I took earlier in the day, and you can see that price just completely struggles to get above these levels, right? Rejects, struggles to get above this level, rejects. So far, we haven't seen a profound and convincing close above 91,877 approximately, which is where our current level of resistance is. So what we need to see for the bulls is certainly for price to generate some momentum, get over this level. Overall, I am liking this so far. We are putting in higher highs and higher lows, but we do need to watch this quite carefully to see if we are going to put in a bit of a dump overnight or if we are going to kind of sink. Something something we will commonly see is as the market moves toward kind of the close, we just kind of start selling off until the UK or the EULA markets step in and decide to start pushing price up. So we'll see what UK and Asia does tonight. But overall, tomorrow, what we want to see is we want to see price sustained above 91,873 if we are going to begin for a breakout. And beginning for a breakout is something that we are looking to do. If we look at the 4-hour time frame, we can see that price has, as I said broadly, I put out this warning. What did I say on Tuesday? This is when I put out the video, don't buy Bitcoin today. And what I said in that video, this was last week, what I said in that video was that we're likely not going to continue moving higher in a sustained fashion for the time being. Now, I'm not fully sold on the idea that we're going to have a significant correction, that we need to have a significant correction. I don't want to underestimate the power of the bull, and you shouldn't either. This is often not a time, you always want to be conservative and not throwing your money stupidly into things. So you want to trade intelligently, but you want to be very careful about really respecting the power of cryptocurrency bull markets. When there is frenzy, when there is hype, when there is desire, when it is this hot, you don't want to be the guy trying to call tops. Trust me, you will bankrupt yourself trying to catch every little top and every little correction when you could just get a low levered long and just sit pretty. So we can see 4-hour volatility from this peak that we experienced back on the 11th. Now we're at the 18th. We've seen it's come all the way down. We didn't get that critical low volatility, but that's absolutely fine. Look at price coiling up, ready to make a move. So overall, what I'm seeing here on the 4-hour time frame, and going back to the micro on the 1-minute time frame, what we need to see is that sustained price action in tomorrow's trading session, making a strong push above that price level, that current level of resistance, and then we can begin to start talking about breakouts and upside targets. For now, we're just range bound. We haven't done anything, and the longer we range bind here, the more likely it increases the risk of a pullback or a more significant correction. So for me, I'm not even really worried about something like a 5% pullback. That's absolutely fine. That would just be back to the bottom of the range. That's completely fine. But that means it's just going to take another 2 or 3 days or 4 or 5 days to wind back up to the top of the range and be looking for another breakout. Overall, so far, this is good. On the 4-hour time frame, we are consistently putting in lower highs, higher lows, but we're putting in pretty unconvincing higher highs. We have lower highs, we have a higher high, we have a higher high. So we'll see. Things are very much range bound, very much consolidation right now. My base case would be to the upside, but I'm not swinging heavily into it yet. I do want to see a confirmed breakout. I do want to see price make progress above that level of resistance. So overall, these are kind of the levels to watch. 4-hour current pullback level would be about 86,704. Did have a nice, strong weekly close. Again, we have already reached my conservative and moderate price targets. So the next targets on the horizon are going to be $102,321, and then my aggressive price target of approximately $112,000. Looking at the daily time frame, we are in critical high volatility. Again, I pointed out, usually when this happens, we go sideways on the daily time frame. As we see here, we went sideways before continuing the pump. So this is the last good example of when Bitcoin was in a strong uptrend. All right, very strong uptrend, strongly above all major moving averages and trending to the upside. But when we get that critical high volatility, we just tend to go sideways for about 4 or 5 days. Now that's already happened. We've hit critical high volatility. We've gone sideways. This will be day 6 of going sideways. So we are looking for a resolution. Now, unfortunately, even though I just pointed out this last example of what Bitcoin did with critical high volatility, it continued on with one last leg of the pump. More often than not, in the overwhelming amount of examples, what usually happens when we hit critical high volatility is that is synonymous with something being overbought, and we do see a pullback. So on the daily time frame, a very moderate pullback would be about 84,175. A more severe pullback, getting down below that though, does begin to get scary, because then we are looking down to these lower levels of something like 78,621 and 72,703, which does not mean the bull market is over by any way, shape, or form. It just means that you don't want to be holding a highly leveraged long through that pullback. So for highly leveraged longs, and this is exactly what I said all last week, if you're in a situation where you're uncomfortable, if you're in a position where you cannot survive a 5 to 10% pullback, then right now you need to probably be closing those positions and waiting for another breakout signal to go hard leverage for the next leg. You don't want to be just sitting there in a highly leveraged position when your asset isn't moving. You need to have a clear and convincing reason to put that risk on. And if it's just the fact that you think broadly price is going to go up, well, that's fine. If you're in a 5x long or a 3x long, that's completely fine. But it's not okay if you're in a 20 or a 50x long. That's not okay. You're going to get wrecked, even if you're right. All right, looking at our dominance shifting, we can see altcoins continuing to charge up. So this is beautiful. This is exactly what I called for last week. I said if Bitcoin goes sideways, we're going to see altcoin shine. And altcoin dominance has gone from 16% last week to now almost 18%. So that is a massive increase in dominance to the altcoins. We see Ethereum dominance continue to plummet, Solana dominance making another climb, Bitcoin dominance rejecting from 60%, down below 60% now at 59.88%. Solana dominance up at what, 3.77%. Ethereum dominance just continues to trend down. All right. So, I mean, I love Ethereum, but those narratives are strong. We're not seeing risk. We're not seeing people go risk off yet. We can see here from total stablecoin dominance. This is not just USDT. This is total stablecoin dominance. We can actually see that we're making currently new weekly lows. So this is good to see on stablecoin dominance. And we do have quite a bit to go before we reach kind of other previous levels of support as far as USDT dominance goes. Looking at fund flow, as we can see, just kind of a Christmas tree here, ladies and gentlemen. Overall, 30-day inflows are very good. Transfer from longs to shorts. This is quite bullish, $2.93 billion. But over the last 7 days, of course, we can see that bears have been in control. In the last 24 hours, bears have been in control. There was a nice spike in buys, but this is a very paltry number, 2.66 million about 8 hours ago. But as far as 6 hours and 4 hours ago, bears were completely dominating. We had another brief surge about 2 hours ago, but certainly here in the shorter time frames, we've seen the bears completely dominate. Are seeing a little bit of inflows now over the last 5 minutes, but nothing really to call home to mom about. So far, bears are in control flow wise, and we do need to see that significant break above that price level that I talked about before we start getting a little bit more confident in another leg up immediately. As we can see here, we had some negative ETF flows for the first time in about a week, about $400 million outflow, I believe, here on Thursday, and about a $370 million outflow on Friday. All right. So actually now we can go see that while last week was on record to be the best weekly inflow week yet, those last 2 days of selling to the tune of almost $700 million really brought us back. We were up here. We were up here at like, yeah, we were up here very bigly for a while, almost competing with the biggest weekly inflow of 2.57 billion. We were at like 2 billion, and then we had about 700 million come and get chopped off the end there on Thursday and Friday. So overall, nice, robust weekly inflows. We do see the inflows are very nice over the last 5 weeks. So again, very promising, very good to see. Now, we need to talk about something very important that I haven't seen anybody else talk about, and that is on the economic calendar. Usually we look at things like unemployment claims, CPI or inflation prints, PPI, other things of this factor to kind of figure out what our opinion is or where our view is or on where the macro is going, how the market is likely to respond to this. But something that I'm not hearing anybody really talk about is the fact that the G20 summits started today. So the G20 summits start today in Rio de Janeiro. And guys, I mean, this is going to be intense. Now, I haven't really heard any significant updates yet. These are a little bit closeted, but I am going to be watching my newsfeed quite closely, and I will be updating you as soon as I hear things. But you have to understand that we're experiencing quite a bit of a revolution and a renaissance here in the United States moving forward with Trump's agenda. And this is going to be in stark contrast to business as usual under the Biden-Harris administration. So it's going to be very interesting to see how countries signal that they wish to do business with the United States, how agreements on things like climate change, like international trade, and like geopolitical conflicts are going to be discussed and considered at this upcoming G20 summit, because this could significantly pave the way for global market sentiment moving forward. Yeah, so the title of this article is G20 Summit Confronts a Global Order Unsettled by Trump's Return. Discussion of trade, climate change, and international security will run up against sharp U.S. policy changes that Trump vows upon taking office in January, from tariffs to the promise of a negotiated solution to the war in Ukraine. This will be very interesting to watch. All right, now let's talk about some hot picks that hopefully will keep your pocketbook jingling. Yeah. During the bull market. First, let's talk about GRASS. So GRASS is a cryptocurrency project that I've been watching for a while. In full disclosure, I do have a holding of GRASS, but let me tell you a bit about GRASS in case you haven't heard about it. You probably have, since its price is up quite bigly. And what better way to learn about something than actually read their frequently asked questions? So GRASS is a cryptocurrency protocol that allows you to install a browser extension. You can also use it on your mobile device to share your unused bandwidth with the GRASS network. That bandwidth is then used by professional institutions or corporations to do things like, according to their FAQ, conduct academic research, check local prices, or view regional ads, et cetera, et cetera, et cetera. But basically, your unused bandwidth will be used by corporations and you will be rewarded for it. So all you have to do is get the little GRASS browser extension right up here. I've been running GRASS for, about 6 months now, I think, maybe a little bit longer since I shared this with my community. So I shared this with my community initially. Pro tip. If you guys want to get the early alpha, you got to join the Trading Academy. And honestly, it's been one of the easiest crypto apps that I've ever used. You just download the browser extension and turn it on. That's literally it. And then it just shares your unused bandwidth. You can customize it, configure it. If you're going to be running a VPN on the device that you're going to be running, or if you're using a VPN in your browser, you'll need to whitelist it or, create a tunnel for it. But either way, or if you're not, or just turn off the VPN or use it on a browser that doesn't have the VPN in the browser. But either way, it's pretty simple to use and you get rewards. So it's free to download. You don't have to buy any GRASS to use it. So just install it, runs, easy, earn some crypto. But does GRASS have price potential? So I made a price prediction on GRASS, so I TA'd it out. So as we can see, GRASS has gone up basically from its market low to about 400%, okay? A little bit more obviously if we want to look at it prior to being launched on major exchanges, but just looking at it as it's been launched on major exchanges. So here we have GRASS on the daily time frame. As we can see, it has moved up in 2 impulse waves so far, each impulse wave consisting of 5 movements, kind of the same thing I showed you guys earlier, how things move up, pump, pullback, pump, and then a more serious pronounced pullback. Each pullback has gone to about the 0.5 to 618 Fibonacci extension, which is usually what we would expect to see. And each leg has gone up about 200%. So looking at this chart, we would expect to see GRASS move up broadly again with the rest of the market, as GRASS is a relatively hot token right now. So the momentum is still there. So we could expect another equal leg up of about 200%, which would put GRASS's price around $7.42. I've measured this all out. That's a price increase from current price to about $6.75 of about 177%. So definitely a good trade on the table. This is how it might work. An initial impulse wave coming out of here, since we have pulled back about 40% from its current all-time high down into that 0.5, 0.618 golden ratio pocket right there. So we could expect a movement up to about 425, pull back to about 330, push up to about 550, pull back to about 425, and then finally that last leg up to about 675 or $7. So this is the bull case, all right? This is the bullish case. The bullish case is that we do end up finding support here and we begin making another higher high and another leg of higher highs and higher lows. The bear case, of course, is that we do see intense distribution. Price is up quite a bit and capital might rotate, and it may take a while for GRASS to recover, or it just might not recover. These things happen. The market is fickle. So we need to have clear conditions for when we take a trade. So my conditions for this particular setup is looking to get an entry around these prices, or if you want to be a little bit more conservative, wait for price to at least close a daily candle higher, since we are in kind of a selling dive right now. So look for price to make a higher high or a higher daily close, or look to purchase it in this kind of accumulation or buy zone, this high value zone. I would be very speculative of prices closing below 210. That's my personal risk off limit. If prices close below 210, it's going to look like we are going to get a deeper and more pronounced correction. So I would be very hesitant about that. So overall, those are the risk limits for the trade. And while you're doing that, you guys can run the GRASS app and just get free GRASS anyways. So I'll leave a link down in the description to get GRASS, or you can click, if you're watching on YouTube, you can probably click the little card that's going to be popping up in the top right just about any second now. So check that out. Today's trading for me, a little bit of an update. Today was pretty decent. I'm up about $1,500. I closed out again. The major trade that I took was just kind of catching that movement on Bitcoin earlier. As we can see here, I've just got some smaller altcoin positions. So overall, these are just kind of break even. The position here that I'm looking at really hasn't made the significant move yet. And the other one really hasn't either made a significant move either yet. So overall, just chilling right here as we kind of close the day out. These, again, as you can see, these are very small positions, just starter positions, and I'll size these up as we go. So just waiting for price to actually make more significant moves in my favor, and I'll start scaling in, getting these up to about, anywhere from $10,000 to $20,000 position sizes. And if you guys want to enjoy an exchange that will give you the opportunity to make those same kind of returns on a daily basis, then you've got to go create an account at ByDFi. It's my official exchange partner. You'll have access to over 600 cryptocurrency trading pairs, up to 200x leverage, 0% spot trading fees, and no requirement for KYC and no requirement to run a VPN. So very friendly to North American and Canadian clients. You can check out my link in the description. That link will give you a special VIP level 1 fee advantaged account, giving you an immediate doubling of your 24-hour withdrawal limit from 12 BTC to 24 BTC, and will also give you 17% off your trading fees on futures. Of course, again, there's 0% spot trading fees for both maker and taker orders. So check out the link in the description, or maybe click the card that's probably popping up in the top right to enjoy a fantastic exchange experience and to help support my content. Thank you very much. Another interesting pick, ladies and gentlemen, is going to be EIGEN. I think this chart looks quite nice. Looking at EIGEN, I want to point out a very helpful tool, and that is the RSI heat map. You can use the screeners here on TradingView, or you can just Google crypto RSI heat map. It's very helpful. So heat map is just kind of gives you a visual representation of where all the assets are, but the RSI heat map just shows you all the assets that you want to look at and where they are on the RSI relative to the time frame. So I like looking at the daily and the 4-hour RSI heat map. And when we're in a bull market, it's just an invaluable tool, because generally, if you see a high quality altcoin that's weak or oversold on the RSI heat map, then that means it's a buy. All right, so that's how I identified EIGEN earlier today. Got into the position. As you can see, that one's up just a little bit. I'm going to size into that as we continue moving up, because EIGEN's pretty oversold here on the daily time frame. Not significantly so, not massively oversold, but again, looking for a nice double bottom. The rest of the altcoin market's moving up. This one's lagging behind. So again, just kind of a no-brainer here. Should be able to get up to about $3 on EIGEN. That's currently my short-term target. And we'll see if EIGEN can actually perform. Again, EIGEN was pretty hyped earlier, but it hasn't done much since listing on Binance. Of course, it listed on Binance relatively late. It did well earlier before it was listed on Binance. So we'll see if we can get some nice price performance here on Binance now that kind of the earlies have sold out and we got this nice little double bottom pattern. But the main thing that also tipped me off to this, if we zoom out, look at this massive 4-hour volume coming in. And this isn't on a breakout candle. This is off a pump off the bottom candle. This 4-hour candle is bigger than pretty much all these other previous ones besides this one. And here's the thing, all these other big 4-hour volume candles all came in at the top of a movement. All right, at the top of a movement. This one's coming in at the bottom. This one's coming in at the beginning of a movement. So where does volume come in? Comes in at the beginning and the end of a trend. So EIGEN looking pretty nice here. Finally, a nice little Moon coin pick here for you guys. This one's up quite a bit, so fair warning. This one is LOAFCAT. All right, so this is going to be a cat themed meme coin. All right, LOAFCAT. I will leave the contract address in the description, but you can trade this on Solana. This is a Solana token. Obviously, I'm using Bird's Eye, which is my preferred machine here for trading Solana tokens. So I'll leave the contract address down in the description if you want to take a look at this. DYOR, yes, I did purchase. I bought about $700 worth of LOAFCAT at this current price. Now, normally I wouldn't do such a thing, but there are some individual wallets that I track online, as well as there is an influencer that shall go unnamed that has been promoting this token on crypto Twitter, on crypto X. And I usually don't like those kind of things, but this particular influencer is a hell of a trader. So for this, and I'm also seeing a lot of wallets that I track on SolScan going into this coin. A little bit of quick napkin math. Its fully diluted market cap is only $5.4 million. And if we go take a look at the cat themed category on CoinGecko, PopCat is currently sitting at a market capitalization of 1.7 billion. All right. The next one, the next highest market capitalized cat themed meme coin is $1 billion, and then 926 million, and then 341 million, 248, 212, 141. So very easy for these coins to reach 100 million. All right. And with some good wallets aping in, and with a high profile influencer shilling this token, I think we could reach 100 million easily, which would be a 20x from current prices. So again, as with all things, do your own research. I only share things that I've actively put my money in, but I'm not responsible if this token dumps, and I'm not responsible for your personal trades. All right, now I want to share with you this nice post from BTC Overflow over on X. He writes, warning, how to not blow yourself up during the next 12 months of the Bitcoin cycle. We are now at the part of the cycle where new people will ape with leverage into BTC and MicroStrategy, get convinced by their favorite influencer that cycles are dead and it's up only forever. I remember this happened last cycle with Do Kwon, the super cycle thesis. How'd that work out for Do Kwon? I think he's in prison. Keep ramping up their leverage until they have their largest trade on as the cycle bubble pops. But here's what no one will tell you. Those 10,000% gains you see your favorite influencer posting are on call options bought 1 to 2 years ago in the depths of the bear market. You are late and will not see the same returns. Your favorite influencer thrives on engagement from bull posting and will not tell you when they think the bull run is tapped out. Yeah, this is absolutely true. Like all the best influencers on crypto Twitter were still like calling for the bull market after price had already pulled back from 60,000 to 30,000. They're like, oh, so we're still good. It's just a pullback. It's just a 50% pullback. All the narratives for why there will be no bear market this time are part of the feedback loop that creates a mania bubble top that guarantees a bubble top. All right. And I like this poster. I'm telling you this because I like to keep it real around here. Bear posting sucks for engagement and draws in trolls. So I gain little from these types of posts, but I think they must be done anyways. That said, I do think we have an incredible 12 months of Bitcoin price action ahead of us. Just be careful with leverage, enjoy the ride, and maintain a healthy skepticism of the bullishness as price action really starts to heat up. Yeah, I don't think we've seen anything yet, ladies and gentlemen. This is a great first introduction. If this is your first cycle, if you're new to cryptocurrency, by the way, welcome. Don't get scammed. Don't get rug pulled. We will never DM you first. But just keep a level head around you, okay? And your best bet, your safest bet always is avoiding high leverage, avoiding leverage altogether, and just focusing on your spot portfolios. Go out, pick a few coins that you think are going to do well, and hold on to them, all right? Buy on dips, add on dips, keep your eyes open for new narratives, be willing to throw a couple $100 into a meme coin every now and again. You never know if it's going to be the next PopCat, all right? And if you're interested in getting serious about trading with leverage, about trading professionally, treating trading like a business, come join us in the Crypto Trading Academy and I'll teach you how to do that. But generally, if you go in without any knowledge or wisdom, you're going to get wrecked because you're going to get greedy and you're going to want to make these $50,000 returns immediately. And that's just not going to happen because you're going to have to take excess risk that you're not prepared emotionally or psychologically to deal with. So keep yourself safe, focus on your spot portfolios, and trade safely. All right, ladies and gentlemen, that's all I have for you. Thank you so much for watching all the way to the end of the video. If you're watching on YouTube, this video right here is going to be what YouTube thinks you should watch. And this playlist right here is our technical analysis for crypto traders, which you will definitely enjoy, especially if you want to learn how to trade better. Don't forget to hit this button and subscribe, and we will see you guys tomorrow.